Ignition. We have liftoff.
Datavault shareholders, how are you doing? Here's your boy, Nate Dogg, your CEO. You guys just had earnings. How you feeling? I took a little bit of a listen to the earnings. I saw the transcripts. I'm liking what I'm seeing. I'm liking what I'm hearing. I'm not a shareholder yet. I've done a couple of videos on Datavault. I said I need to wait until the end of 2026 to get involved. I need to see a few earnings come through first. Well, the first one just came through November 17th, and I like what I heard. I like what I saw. I'm getting very interested. We're going to go over the numbers. We're going to go over the news. And the stock hung in there on a down day. The market was down. Datavault was hanging in there. Let's take a look. All right, we are looking at Datavault's chart from Monday, November 17th. And yeah, a lot of stocks were crashing. Not Datavault, it was hanging in there. Up almost 2%. And really a nice move up from pre-market. And looking at the 5-day, it was in the dumpster for the past 5 days. It ran up to about $3.60 when it kind of got on my radar right before then. And that was kind of like the top, and it has just been moving down for the past month here. Oh, and I think we're going to draw back up. We're going to draw back up here. I think we might be moving higher. All right, let's recap this bad boy. Quarter 3, 2025 revenue was $2.9 million, up 148% year over year, and roughly 67% sequentially from quarter 2. The company raised its 2025 revenue guidance floor to $30 million. Now, some analysts wanted that higher, so this is on the low end. The $30 million is on the low end. But this is the part that shocked me. We raised 2026 revenue guidance to at least $200 million. To at least $200 million. I read that like, what the heck was going on? How are they going to do it? Well, one of the analysts pretty much said that, like, how the heck are you going to do that? That's very ambitious, very aggressive. We'll look at that here in a second. All right, let's give you the highlights from the earnings. The company emphasized its work in real-world asset tokenization. We know that's a thing. We had a previous video on BlackRock. They're getting involved in RWA. We talked about the CEO, Larry Fink. He talked about this. We talked about the CEO of Robinhood. He said RWA is going to eat the financial world alive. It's coming. Now, Datavault said they're covering assets such as gold, diamonds, rare earth metals, carbon credits, and more. They have a new multi-million-dollar agreement with Triton Geothermal LLC out of Houston. Now, Datavault will receive up to $8 million in tokenization fees tied to a $125 million digital token offering, plus 5% ongoing share of transaction fees. They talked about global expansion, active engagements across the U.S., Europe, Asia, and licensing deals across various industries. The CEO, Nate Dogg, described the company's platform as uniquely positioned to monetize data and transform real-world assets into digital value. The CFO, Brett Moyer, gave commentary on margins. We talked about some of the newly acquired businesses in my last video. They say margins are going to run about 35 to 45%, while the licensing and exchange platform model could push blended margins towards 55 to 60%. Now, the company's balance sheet. Management noted that a $150 million strategic equity investment from Silex is contingent on shareholder approval scheduled November 24th, and once completed, would bolster liquid assets to an estimated $125 million. Now, in this earnings call, in the transcript, they said they weren't going to be diluting shareholders any longer. That's after this shareholder approval. They talked about this in October, so this was upcoming. Dilution is happening, okay, folks? Dilution is happening. It's not going to be all at once. They'll issue shares as needed over time. They're not going to dump it all on the market one day. And they need this to bolster operations. They're still in the red. They're going to be acquiring businesses. The licensing deals, you don't get that money all up front. It's over time. So please expect some dilution over time here. The tokenization RWA narrative is central to the future outlook, which means execution and regulatory risk become more critical. Now, the things that we need to be on the lookout for, guidance is ambitious. Going from $2.9 million in revenue in quarter 3 to $200 million in 2026, they're going to have to execute, and things are going to have to happen fast. But like we talked about, the company will make strategic moves. They're going to acquire some companies, and they're trying to expand globally and have some new business lines as well. And here's one of the analyst questions here from Maxim Group. And he says, the guidance jumped off the page to me. Maybe help us understand what's sort of locked into that 2026 guidance versus how much is are you working towards locking in? just so we have a sense of maybe stress testing that a little bit. He's talking about that $200 million for 2026. And the CEO, Nate Dogg, says, the concept here is really to underpromise and overdeliver. I don't look at the $200 million number and feel intimidated. We have a very nimble AI strategy. To stress test the fourth quarter is to understand that this is our first go-around. We'll be expanding that development to meet the demand of this international demand for tokenomics. And he said, when I was reading the full transcript, he said that the fourth quarter of this year, it's the hardest, it's the steepest climb. This is the hardest part right now to end the year. I like that he said that. I like that he said the hardest part is that first few months right now. These past few months in 2025, as they lay out their strategy, as they continue to execute. It's not that it's going to be easier next year, but it's that their strategies are coming together. Their plan is coming together. And I think they have dozens of contracts ready to go. It sounds like that. But here's the same analyst talking about margin. He says, I've yet to see it play out within the tokenization on your guys' income statement. He's calling them out. I haven't seen it. Can you help us understand? And the CFO, Brett Moyer, says, when you look at the businesses we're acquiring, that creates probably the opportunity to do $35 million to $50 million next year. So they got $50 million probably covered there. That's going to be more traditional margins, 35 to 45%. If you go back and look at the deals we've announced, I would expect the rest of the revenue to be weighted higher, 60% range. If you blend it all out, you're going to be at 55 to 60 margins across the company. Now there's another analyst question on the balance sheet, the cash position. With the $150 million investment from Silex, there's been a lot more acquisitions. Maybe if we could just boil it down, do we have a rough sense of what cash is and what the state of that investment is from Silex? And the CFO said, that investment is locked down and documented. The only thing between us and having that on the balance sheet is the shareholder vote on November 24th. By the end of the year, you have, $130 million plus of liquid assets, maybe $125 million. The only debt on the balance sheet currently is debt associated with the strategic acquisitions of CSI and Datavault Holdings. Now, a private investor with millions of shares, he chimed in. He said, I'm just astounded by the revenue guidance. I'm wondering what's the revenue contract backlog right now? And your CEO, Nate Dogg, he said, there are dozens of contract negotiations worldwide for tokenization of real-world assets such as gold, diamonds, rare earth metals, the biotech scientific exchange component. Emphasis that each contract is not just revenue now, but for recurring licensing streams and strategic footprints. All right, and so those are the major questions I saw. The recap is here if you want to take a look at it. And if you look at the hedge fund activity, we've seen 26 institutional investors add shares of DVLT, 10 decrease. Vanguard Group says we want to add 84% to our position. BNP says we're going to increase big time as well. Geode Capital, we're going to go 59%. JP Morgan's getting involved now. Barclays is involved. And UBS Group says, hold my beer. We're going up 4,592% in our shares, basically meaning they didn't own anything. Now they own a lot more shares. And the list keeps going on and on. The institutions are getting involved now. What does that tell you? Now, I was quite impressed with the $200 million in 2026 revenue estimate. A strong hint from the CEO that number may be even increased. The CFO stated once the deal with Silex closes, there will not be a need to raise additional capital for years. That's what he said. For years. We're going to hold him to it. Now, the company does have high operating losses and heavy debt. And from what I can tell, based on the current operating levels, the company will need those additional funds that they're going to be acquiring through dilution here to keep operations going for the next 12 months. And as we know, the company has previously funded its operations primarily through sales of its securities in public and the private markets. Now, additionally, future capital requirements will depend on many factors, including the rate of revenue growth, the expansion of sales and marketing activities. The company may need to continue to dilute shareholders a bit to continue to fund operation. As we know, Datavault is in the building phase, and operating costs are high right now. Now, the good news is that there's a lot of deals, a lot of partnerships, licensing deals, but the revenue won't be visible in the financials until the upcoming quarters. The deals are too recent to be translated into concrete revenue on paper for us to see. Now, there will be a lot of acquisitions and partnerships that will reflect into the guidance for 2026. I think we'll see those numbers hit in the upcoming quarters.
Datavault AI, a leader in data monetization, credentialing, and digital engagement technologies, provided a corporate update that includes substantial commercial advances, expanding global partnerships, and a deepening pipeline of licensing contracts across real-world asset tokenization. Revenue for the third quarter, which ended September 30th, 2025, rose 148% year over year to $2.9 million, and increased 67% sequentially versus the second quarter of 25, underscoring strong traction in the company's high-growth verticals. Commenting on the third quarter's rapid progress and the 2026 outlook, Datavault AI CEO and co-founder Nathaniel Bradley said, "Our solutions have captured the attention of corporations and governments worldwide that have come to realize the power, cost savings, and revenue potential of advanced data valuation and monetization."